I think three fundamental pillars around which I wanted to build something was I wanted it to be an emerging market focused business. This year itself, we are expecting almost 1 million students to go abroad. About $100 billion is received in India from non-residential Indians living abroad.
How old is Moneyhop then? And how did Moneyhop happen?
Our guests for this podcast are Mayank Goel and Rahul Bora. In this interesting podcast, we will learn about their inspiration, about what pain point they felt to start a company like Moneyhop, and also we dive deep into cross-border transactions. Let's listen in. Welcome to Uvacha. We are here to learn through our conversations. So thank you so much, Mayank and Rahul, for being here.
Pleasure.
So Shubhanga, do you want to tell us the backstory of how do you know Mayank and Rahul?
No, of course, Mayank, I think I was introduced through Devi
That's correct.
about a year and a half ago.
About that much.
And you were, I think, trying to get in touch with someone in Oak North, if I recollect well.
That's correct.
And I think I was probably the only one Devi knew at Oak North, and that's how we got connected. But I think we've stayed in touch. Mayank is an entrepreneur. He has started Moneyhop and a cross-border platform.
That's correct.
And Rahul has joined Mayank just about less than a year ago.
Yeah, about 9 months back.
And incidentally, I knew both of them separately, right? So
Yeah.
Rahul was in London as well, and I met him when he was in Credit Karma.
That's right, yeah.
And
We got introduced through Ashutosh.
through Ashutosh, yes,
right.
of course, yeah. So 42 VC.
That's right.
And he said he was moving back to Bangalore and
For good.
for good. And Bangalore, any conversations that has the word Bangalore, I tend to get excited. So thank you so much for your time.
Absolutely.
And,
It's a pleasure.
I'm looking
No,
forward
thanks
to
for
this
having us.
conversation. So how do we start?
Yeah.
Probably a quick introduction from both of you, and then
Yeah, so we'll start from what you both do at Moneyhop, and then we rewind back to what you've done in the past.
Sure. I am the founder and CEO of Moneyhop, so I take care of one and everything. We get involved in, customer calls if there's an escalation or kind of strategizing, looking at finances. So kind of touch one and every bit, just trying to make sure that we're heading in the right direction.
Fantastic.
Yeah, so I came on board as a chief operating officer, providing a bit more capacity for Mayank to manage the business. We work very, very closely across pretty much all the priorities and challenges and problem solve on a day-to-day basis.
And do you want to tell a little bit more about how Moneyhop came into existence? Like, start from where you actually come from and
Sure.
help us understand why Moneyhop happened.
Yeah, no, sure. So I come from Dehradun, born, brought up in Dehradun, come from a typical middle-class Marwari background. My parents ran a spices and dry fruits business. At one point, the house I used to live in accommodated 65 people.
Really?
Yeah, so my grandfather and his 4 brothers and their sons, which is my father's generation, their wives and their grandkids all lived in the same house.
You must be feeling lonely in this room.
Oh, it was a wonderful experience growing up. Honestly, we had a cricket team A and a cricket team B. We had a children's association
Within the family.
within the family. We had a children's association. We had a comic book library. There you could borrow books from the library for ₹1 per week or something like that. I used to be the treasurer of the library. I did siphon off some funds from there to buy myself some treats. But it was a lot of fun. I mean, we used to go to the same schools pretty much, same tuition classes. We would hoist the national flag and call our tuition teacher to do that on Independence Day. So it's a lot of fun kind of growing up, and I think it did teach a lot about kind of managing people and negotiating a little bit. As with most Indian families, I was decent at mathematics and physics. So they thought the best platform for me was to do engineering. And engineering is what I did. But towards the end of my engineering school, telecommunication engineering I did, I realized that it was not really something I was really passionate about. And a lot of kids were, I studied in Pesset in Bangalore, so a lot of kids were traveling abroad for studies. And I was in the final year and I didn't really know what to do. So a lot of folks were like, oh, why don't you do financial engineering? It's a combination of finance and engineering. A friend of mine was going to MIT to do financial engineering. I'm like, oh, I should apply for the same. And thankfully, I got through Imperial College London. And that was a beautiful platform for me to learn and grow. We had students from about 60 countries, cross-cultural sensitivity. I didn't even know how do you make money when the stocks went down, right? I mean, how could you possibly make money when something is reducing in value? It was the first question I asked, but learned over time, made friends for life. But two of my best friends are, one is Swedish guy and one is a Russian guy. And consequently, started working for Merrill Lynch in London as a structured derivative trader. And then moved to Jefferies in London doing electronic trading. So we would build and deploy algorithms on co-located servers, which had the ability to do as much as $100 million clip size without any human intervention in about a microsecond. So that's kind of what I did for about a decade, having lived in London. But I think again, investment banking was not my calling. I kept talking about having to do something on my own. I initially thought about an idea whereby I wanted to start a website in India called lifemadeeasy.com because every time when my mother visited London, there was a store called Tiger, and I would take her there, and she would pick up these nifty items which were not very expensive, but they did make your life easier, which were not present in India. So I thought I could kind of source it from the West and retail it in India.
Any specific object that you remember?
I do remember one specific object. In London, when you want to pick up any garbage from the floor, you don't have to bend. There is kind of a stick which has a clip, so you could just without bending down, you could lift it up. I thought that was quite nifty.
I think here people use it to catch snakes. Yeah, it's a very similar object.
That kind of stuck with me, and but I had taken a loan which I needed to repay. After having moved out from 65 folks, we settled in a house which accommodated 18 people, which was my grandfather and his descendants. So we had put that house on mortgage, thanks to all my uncles for having agreed for that. And
just for your studies?
Just for my studies. So if I didn't pay that loan back, everybody would be on the road. That was a lot of pressure for a 22-year-old boy.
So Rahul, what about you? Like, how did you start? Where were you kind of born? What did you study? And I know we met in London.
Yeah.
But
yeah, so I come from Bangalore, right? As good as it gets. My parents moved here like years back for better livelihood. Our roots are in Udaipur and Rajasthan, but parents moved here to find new opportunities and so on. But I'm born brought up here. I mean, I consider myself as a as to say a local boy.
Okay.
So
and
grew
you're
up
very
here.
Familiar with the local.
Yeah, of course. So we grew up, in western part of Bangalore, in a suburb called Vijayanagar. I went to a local school, went to Joseph's for my PUC, and then post that, I decided that I want to be away from Bangalore for a bit. So for my engineering, I consciously chose a college that was not local, and because I did relatively okay in the common entrance test at that point in time. I ended up joining, I went to REC Surathkal or NITK. And the sole reason I did that was because I wanted to be away from family and, spend time in a hostel. It was not really for the engineering or the degree. In fact, I just took whatever,
So what did you take up?
So I took mechanical engineering and didn't know anything about
But three of us then.
Yeah, there are 3 people who are mechanical engineers and 3 people from Pesset.
No, but it so happened that, obviously the first year is common, right, across all engineering, or at least back then it was common across all engineering degrees. But it's only in the second year when you start focusing on your specific degree, right? And a month or so in, and I realized, like, this is not for me at all. Like, I can't be wearing, blue, shirt and trouser and going to, a workshop. So I quit, and it so happened that there was an opportunity to move to electrical and electronics engineering. So I did that. But again, little did I know that that would be even more, harder than mechanical. But anyway, like the point of spending that time in Surathkal was to, build connections, build friendships that last, for a long, long time, and just spend time away from family and sort of learn to, stand up on your own, sort of a thing.
So you graduated with electrical and electronics.
Yeah. So I came out of REC in 2002 as a electronics engineer. Obviously, campus placement is quite a thing in Surathkal, so getting a job was not that difficult. But again, similar to Mayank, I didn't really know what I wanted to do, so basically just ended up doing what everyone else was doing. And then back then, like as you all know, Bangalore was growing with all these MNCs from US and Europe coming and setting up shop here. So there was just one after the other, companies coming in for recruitment, and I just ended up joining Samsung Electronics because I happened to do well in some tests that they ran. So I joined Samsung Electronics as a techie, as a software engineer. Did that for a relatively long period of time. Spent a lot of time in South Korea and Seoul and in their headquarters. It was a very fabulous experience. Most people tend to move west. I sort of moved east, and again, getting that cultural sort of experience was pretty cool back then.
So you lived in South Korea as well? Or?
Yeah, I lived there for so I was traveling back and forth between Bangalore and South Korea. Like over a 5-6 year time frame, I would have spent over a year in South Korea, surviving in sort of extreme cold and very poor vegetarian food. But that was a pretty solid experience, not because of the job that I was doing, which was basically writing software, but because Samsung as a business itself, or Samsung Electronics, was going through a significant change. Right, it was dwelling in smartphones and really took the mobile industry. It did really, really well. So I just got that exposure to working on pretty fancy technologies and high tech stuff. So that was an experience that I loved. But I knew that this is not something that I want to do. So got married in 2007, and it so happened that my wife, Khushbu, she is my next door, girl, my neighbor. It so happened that post marriage, we sort of decided that we're not going to be, living in Vijayanagar or with our parents. So we want to spend some time away from family. So again, that REC Surathkal sort of mentality kicked in. So we moved to London because we just thought that that's a great location to be, and it gives us opportunity to work in a Western market, but also be relatively close to home compared to, let's say, a US. Mm-hmm. So I moved to London in 2008. Landed in Heathrow with like $1,000 or £1,000, I should say, in my pocket, no job, because at that point UK allowed folks to come in without a job on what's called a HSMP visa, highly skilled migrant worker, whatever it was called then. And then they gave you the time to find a job, once you're there. But it was a very tough environment, as you know. I landed in June 2008, and I think July 2008, Lehman crashed, and then there was lots of other, of other banks
going down. Just before,
literally a few weeks before Lehman crashed. Yeah. So it was a pretty tough, journey or experience. The first few years was quite difficult. Okay. But again, my Samsung experience helped me out because of.
You didn't decide to come back. You decided to stay there.
No, I think one thing that I've learned, and again through my REC days, is you learn to live through difficult times. You learn to problem solve. You got friends. You figure out a way to come out of situations. So. Yeah, I mean, my wife and I, we were very clear that we're not going to come.
She was working?
No, I mean, both of us were not working, no. So fortunately, the Samsung experience helped me out. I ended up joining a startup there that was working on some new age technology. So, got to do that for a period of time. But I was very clear that I wanted to completely change what I was doing. So decided to go to either Oxford or Cambridge for an MBA to the business school. So did that in 2011, and basically then just changed everything that I was doing. So I moved from being a software engineer with my heads down, not knowing what I'm doing or why am I doing it, no exposure to the business or, the commercial opportunities, to, working as a strategy consultant, coming out of Oxford and advising large multinationals on how to run a business. So that was quite a thing. But yeah, I mean, so post Oxford, I've done a variety of things. Again, one thing that I love to do is, to focus a lot more on breadth as opposed to depth. And what I mean by that is just going after a variety of experiences, and picking up different things in life. So I worked as a strategy consultant, got an opportunity to do a project on M&A for one of our clients. Really loved that.
Where were you working?
So I was doing strategy consulting at Booz and Company back then. So I did a M&A project. Loved that. It was a very fast-paced, complex piece of work. So I decided, okay, fine, I want to do M&A for the rest of my life. So then moved into private equity and M&A advisory. Got to work on like 25 odd deals on buy side, sell side. Absolutely loved it. And then whilst I was doing that, I got the opportunity to work on a tech-focused, fast-growing startup. And then I said, fine, I won't do corporate M&A now. I want to do, VC investments for startups. So then again moved into venture capital investments. So did that for a period of time. So yeah, I've had a variety of experiences, but there's always been a sort of common thread running across.
And what is that common pattern?
The common pattern is, just be on a learning curve, picking up new skills, new experiences, understanding how people make, how people make or build businesses. What does it take to, build a successful business? Things like that is absolutely what I crave for. So, the strategy consulting stint, the M&A stint, PE stint, and the VC stint all just gave me exposure to a lot of, solid, business people and founders and entrepreneurs.
How old is Moneyhop then? And how did Moneyhop happen?
So yeah, I mean, as I was telling you, I think I was always kind of scouting for these ideas to start something, and I think three fundamental pillars around which I wanted to build something was I wanted it to be an emerging market focused business because I felt that the digitization of financial resources, right, would provide a large enough alpha for us to build a meaningful business. I wanted the market size to be big enough for us to build a sustainable business. And lastly, I wanted it to be a problem that I had personally faced. So I understood the nitty-gritties of what I was solving for. And as I told you, when I had traveled abroad, I had taken this loan for which I was paying 12% on a collateralized loan, that is. But I didn't know any better than that. So the bank helped me remit the money and so on and so forth. So 1 year after having completed the course, when I was repaying the amount and I did a little bit more calculation because I understood a little bit more finance, I realized that I had actually paid 5% more to remit the money from India to the UK for my tuition fees. And that came as a big shock because, anyways, I was paying 12% and now there's an additional 5% that I've
5% on the
5% on 50 lakhs is like 25,
2.5 lakhs.
2.5 lakhs rather than
Just for
transferring the money. Yeah. And, again, my father had never traveled abroad. I didn't even have my passport. So they obviously took advantage in some way or form of the ill-informed people that were presented to them. So that
was there a better way to do it back then?
I actually wouldn't know because we didn't even scout for any other places. The bank said we were doing the loan and I was grateful that I was getting a loan and I'm like, yeah, whatever, right? So we didn't even look for any other alternatives at that point in time. And so this kind of, the loan was done by somebody close to us, somebody my father knew. So it was a double betrayal for us.
Yeah. Help us understand, at the end of the day, once you kind of get the itch to start something of your own, you could have done anything, right? You could have started a lending startup.
Yeah.
You could have done an education lending, or how did cross-border came into existence and what attracted you about that?
Sure. So, having gone through that experience of being, a certain bank being non-transparent about what I was getting charged, that kind of stayed with me for a very long time. And I was constantly, as I said, looking for ideas in the emerging market space. But I was also, I think, waiting for my life to settle down a little bit before I jumped into anything. I was still dating my wife, Shruti, And after PESIT, she decided to go to the US, and I went to London, and we were doing cross-border long distance, if you like it, for 7
The first time I've heard
That's a
cross-border dating.
cross-border dating. Yeah.
Depends on, did you do transactions there also?
But there were instances where I took flights, not really knowing where I was taking a flight to after a Friday evening drink. So there were instances like that for sure. But subsequently, I think in 2017, after I got married and Shruti moved to London, we were settling down, and my sister, my two sisters and their husbands decided to visit us in London. And one of my brother-in-laws runs a SaaS company here in Bangalore. The other one is also associated with the startup, but lives in Delhi. And they have fairly high amount of exposure when it comes to, they travel a lot globally, and they have a fairly high amount of exposure to what instruments they could use to do transactions when they're abroad. And it so happens that I asked him what instrument was he using. He was using a credit card to do the transaction, and I asked him, how much does these companies charge you when you spend in pounds, when your the denomination of the card is rupees? And he had absolutely no clue. And we looked into that a little bit more deeper and found out that he was being charged anywhere between 3.5% to 4% for every dollar or every pound that was being spent. And that really gave me
This was when? 2017.
2017, 2018, as a matter of fact. And it gave me kind of an aha moment, because I had seen the evolution of some of these cross-border startups in the UK, TransferWise, Revolut. They had done really well in terms of democratizing the cross-border payments, the experience that people were going through, the transparency that they brought about. And I felt that even in 10 years from when I left India, almost 10 years, should I say, in 2018, when I left in 2010 and through to when my folks were visiting in 2018, not much had changed. So I decided to kind of undertake this experiment or validate my hypothesis that the cross-border still had a play where a lot of value could be created. So I personally spoke to about 200 to 300 folks while sitting in London and getting introduction to people who travel. And then in 2019 April, I decided to spend about 3 weeks in India. Came down, met a lot of VCs, spoke to people in about 12 cities, and understood that though India was undergoing this digital transformation journey on its own. We had the average age was 29-year-old of Indian millennials. There were 700-800 million smartphones being used, about 10 gigabytes of data per phone per month. People were swigging it everywhere. People were taking Ubers, and really they were craving for digital experiences, right? We also expected the folks to not have driving licenses, right? Because everybody was kind of Ubering it everywhere. But UPI had been launched, demonetization had happened. So the digital transformation, even in the financial services, was happening. But the cross-border was still stuck in a rut. Mm-hmm. The cross-border payments and remittances experience was still being determined by the large public sector banks, and they didn't have any incentive to change it because they were kind of milking the cow for as long as they could, right? And this
Sorry, you're already speaking in past tense. Does it mean that they're not milking it anymore?
Well, they are still doing so, but they're at least facing some competition now.
Okay.
I mean, bear in mind that we've all worked for large organizations, and somebody has to be very forward-looking and needs to be a part of the system for any transformation truly to happen. So for large public sector banks, for this to happen, it's a decade-long process from when they decide to start doing it. But kind of coming back to the experiences or the conversations I was happening, every party I went to during that course of 3 weeks, everybody's talking about traveling abroad. The disposable income is going high. Even smaller entrepreneurs want to kind of sell their products online, digitally to a foreign buyer, but they really don't know how to collect the money. They don't know, as we call, send, spend, and collect, right? So either you're sending the money from one account to another cross-border, or you exchanging currency or through an instrument to be able to spend abroad, or if you are an exporter of services or goods, you're collecting money from abroad. Each of these had a huge amount of friction, lots of paperwork, in branch, extensive paperwork, non-transparent fee structures. And we really thought at that point in time that there was a large market which could be attacked. And as in when India does well and comes up on the global scale, a large market could be created by revolutionizing how the cross-border payments and remittances happen. And we thought, how can we make sure that this cross-border payments can become paperless, presenceless, and cashless, in line with the broader economic agenda of the Indian government to digitize the financial services? How do we make sure that it can be more economical, and every dollar that leaves India can happen in a much more seamless and a cost-effective manner? And that's how really Moneyhop came into being.
And so, can you talk us through like the cross-border, industry itself? Like, how big is it? We do know that India is obviously one of the biggest
Senders of
receivers of money.
And this is individuals or businesses?
Yeah, so both about $100 billion is received in India from non-residential Indians living abroad, and this is C to C, as we call it, consumer to consumer. There's about $40 billion that leaves India under India is a capital control economy, so every dollar that leaves India has to happen through a designated RBI regulated entity.
Yeah.
Out of this $40 billion, a significant portion of money goes for travel and education, and then other bits like medical tourism.
What does significant mean?
About 80-90%.
Okay.
Yeah, so it only is for education and travel. And then there are a few other categories like investment in foreign equities or medical tourism.
So 40 billion is not C to C.
40 billion is C to C.
40 billion is C to C only. Yeah.
Only.
But when you're saying investment in foreign equity, it is not necessarily C to C, right?
That's correct. So LRS, which is a liberalized remittance scheme, which is a framework which allows you to send $250,000 per person per financial year from India abroad. And there are 10 categories which the government has defined for which you can move the money abroad.
Okay.
One of them is education. The other is travel. Then it's investment in foreign equities, purchase of immovable assets abroad, medical tourism, and so on and so forth. And within this, about, as I said, 80-85% is education and travel. Which is largely C to C. I mean, technically speaking, even within education, if you're paying to a university, it can be termed as C to B, which is a consumer paying to a business or a merchant, because the college can be termed as a merchant. But it's essentially origination is certainly happening from individuals. And then there is obviously a large market of B2B or B2C or C2B transactions, whereby there's an Indian exporter, let's say, sitting in Jaipur manufacturing carpets, and he's sending to a foreign buyer. And he can send a link, let's say, for argument's sake, to a foreign buyer to make the payment, but the money is an inward remittance because the money is coming into India. And consequently, you'll also see an importer, right? So an importer is buying goods or services from abroad and hence has to make a payment from India outbound. That runs into trillions of dollars. And I'm still not covering Reliance making payment for oil to Saudi Arabia.
One of those will come under
B2B.
Trade. Remittances.
Trade remittances, right? There's another framework which India has come about. RBI has launched, which is called OPGSP, and now it's called OEIF.
So you'll have to open it up for us.
Sure. So it's essentially a framework whereby Indian exporters or importers can use an OPGSP enabled partner to receive or send payments where the invoice value is less than $10,000 in a digital manner. So there are several other players, several fintechs which are trying to work on that framework as well, whereby they're working a lot with, let's say, a slipper manufacturer in Ludhiana who's selling his goods online. How does he collect the money? or I don't know, Ayurvedic oil manufacturer in Kerala, if he's exporting certain goods, how does he collect the money and bring it back? Of course, there are providers such as PayPal and a few other providers like that, but the cost of that is extremely high, as high as 5% again. So a lot of providers are trying to
And so
come in.
do you play in the C2C space, or do you also play in the B2B and B2C spaces, Rahul?
Yeah, I mean, for now, we are very much focused on the C2C, or what we call the LRS framework. And again, within that, just piggybacking on the segments that Mayank called out, we're very much focused on two categories right now, which is students going abroad for foreign university education and travelers. Just to provide some more context, this year itself, we are expecting almost 1 million students to go abroad. If you think about it, like 10 lakh students who are studying abroad will be going abroad to study in 2023.
This is applicable in any country.
Yeah, this is across the globe. Obviously, geographies like US, Canada, UK, Australia, New Zealand, like these are the major corridors students go to. But of course, you have students going to, let's say, the Middle East. You have students going to France, Germany, and so on.
So what Moneyhop does is become a channel for this
Yeah, you could
transaction.
look at us as a payment gateway for students.
And the college has to approve it or no?
No, so typically what tends to happen is the foreign students, in this instance, an Indian student traveling abroad, will need to do two kinds of payments. One is what we call education fees, whereby the money is going to go to the university. And the second is what we call living expense, whereby his parents or through a loan, he would have secured some financing to sponsor his living expenses there. Now, the college is not in control of saying how do you remit the money, though in certain instances that can be the case. But more often than not, the college says that, you need to pay $15,000 for your semester fee or a yearly fee. So it's students' prerogative to find the best mechanism to be able to remit the money.
So their account number and all of that is.
Yeah,
That's correct.
And I think the key caveat there is the university expects the student to make the payment, right? So again, coming back to that 1 million student number, right? If you take $20,000 as an average spent per student per year, right? You do the max and you're looking at $20 billion just within the student segment. That's the amount of remittance we are expecting. So it's quite significant.
And these are all money going out of India.
Money going out of India, yeah.
Got it.
That's correct.
And what are the challenges that are actually there? So one is cost, of course, but I've also heard, one of our very dear friends, Shashank, actually kind of moved to US back then, around when you probably moved to UK. And the procedural aspects of moving money seem to be pretty laborious and onerous, right? On people who are actually kind of doing. So can you break us down? What is the process today for anybody who wants to kind of, pay their college fee outside India?
Yeah. See, we have to first take one step back and understand why is it so laborious, right? So if you think about any financial system, there's something called a central clearing house, right? So if you have a bank in State Bank of India, and I have a bank account in HDFC, both of these are what we call an AD1 bank, which is Authorized Dealer Category 1 bank. So RBI has entitled them to be deposit-taking entities, and consequently, it in some way or form these banks have a bank account with RBI, right? And they have access to the central clearing system. So whether it's any of these payment methods, be it IMPS or NEFT or RTGS, it's just a mechanism. It's just various way of sending money domestically, but they have the access to the central clearing house, whereby if you want to pay me 1 lakh rupees, it can move from that central clearing house onto my account. Now, a few things to keep in mind here is the fact that, first of all, the intermediaries here are limited. Secondly, of course, the frauds can happen, but the money is still within the system. So if you are doing a fraud or I am doing a fraud, RBI still, we are very much within the RBI's jurisdiction for them to catch hold of the bad actor and impose penalties or whatsoever. Now, if we take a cross-border payment, the dynamics and the ecosystem changes. First of all, the originator and the recipient are in different jurisdictions. They're regulated by different central banking authorities, which might or might not have different risk averseness, right? And since the money is moving outside of your paradigm, you will need to be extra cautious. Since the money is moving between
you?
Sorry,
Who is you
in
will
that
have to be extra cautious? Is it the regulator who will have to be extra
the
cautious?
regulators, absolutely, right? And since money is moving between corridors, there are different intermediaries which are involved in this. When the money is leaving India or coming into India, we have to be extremely cautious about things like anti-money laundering, counter-terrorism financing checks. Because if the money is left, you don't have oversight over it. And this results into several people playing a small role, and then the cost of doing remittances kind of hiking up. Now, of course, as and when we move away from the paper-based systems into a digital world, and so much of digital presence that we have, there is ways by which these can be prevented. But what we have to understand is that ultimately the central regulators are more answerable to a vulnerable individual. They're less answerable to a reliance. Their primary prerogative and the mandate is to make sure that an individual who doesn't have that much of awareness is more protected than an individual or an organization which is. So sometimes we end up being collectively a little bit more overprotective, and that can hamper the experiences and hike up the charges. What a lot of fintechs are trying to do in this to solve this problem is to bring about technology, and fairly sophisticated technology, to make sure that the fraud rates goes down. All of these checks and balances happen not just in as a tick box exercise, but both in ink and in spirit, and also making sure that the user experience and the cost effectiveness of these transactions actually kind of go up. And that's what Moneyhop is trying to do, right? Moneyhop is trying to make sure that when a student is traveling abroad, he's got 1,000 things to take care of. He's a fairly technologically advanced individual. He's got a presence in terms of his PAN is going to be registered, he's going to have an Aadhaar card, and so on and so forth. So all of these technologies are kind of used to make sure that he can remit the money while sitting in the comfort of their home. We are obviously making sure more than anything the compliance is happening, but the reduction in the operational laborious process and the money that we save by doing so is in turn passed on to the consumer, and hence kind of bring about a bit more tech-driven.
So what is the percentage that Moneyhop is operating at right now for a transaction, let's say to the same place in London?
Yeah, I mean, if you take a bank, right? Let's say, a student has an account with a bank, walks into the branch and does a remittance through them, you are looking at anywhere between, 2, 3, 4%. And that charge, that markup is typically made up of two components, right? One is the markup on the currency itself, right? So if you're converting rupees into dollars, and let's say the rate is at 82, an ICICI would do the currency exchange at, let's say, 83 and 50 paisa. So that 1 rupee 50 paisa becomes the margin or the FX markup. The other component, the second component, is various fees that get added on, right? Again, going back to Mayank's point around, non-transparency. So there could be various charges in the name of bank fees or processing fees or convenience fees and what have you. So net, for a $10,000, let's say, education university fee payment, a student could be looking at 3-4%. Compared to that, we are able to do, the remittance, the exact same
percent in the sense, sorry,
3-4% on, let's say, the $10,000.
If the exchange rate was 80 rupees, I would have paid 80 lakhs. 80 lakhs or 8 lakhs?
8 lakhs.
8 lakhs. And it is 3 to 4% on 8 lakhs.
Are you looking at 20,000, 24,000? Yeah, for that particular single transaction. So versus a traditional bank, we are able to do the same transaction, for less than 1%. with both the forex markup and the various fees added on. So we are very, very competitive compared to what a private or a public sector bank is able to do.
How are you able to do that? Because you're not a bank.
We're not a bank, no.
And where are you actually kind of finding that efficiencies?
Yeah. So see, there are few reasons why the markups are high. One is pure play that I want to make more dough for myself, which is a traditional play. But also, in some instances, the costs are also that high because, and that kind of goes into typical traditional banks versus fintech, whereby they have a large presence on the high street. They have a large number of people which are employed to do these transactions. There's a lot of paperwork that is involved, and so on and so forth, and a lot more intermediaries to process the same transaction. What we are able to do is that we are able to do a lot more with a lot less with the usage of technology. And in instances, I can responsibly say that the checks and balances can be more stringent at our side. So much so that if 5 years down the line you ask me a certain transaction that has happened, I can show you the digital logs of how we made sure that if you are claiming to be Shubhanga, we will identify you as Shubhanga. Right. Secondly, we are able to kind of it's a volume based transaction. So if we are able to buy in bulk if you like it and retail it out. So we are able to also provide those cost efficiencies to the end client, and we've done a lot in terms of integrating with a lot more providers where everything is API driven, and hence people are not literally clicking buttons to get a transaction to happen. See, cross-border payments is a game whereby if you truly want to bring about innovation, it's not just going to be about technology. It will have to be regulations as well. So we are...
this is RBI approved.
Of course.
Yeah, RBI or the respective corridors, central banks of the corridors where you want to operate. So we are very comfortable to say, and maybe very few fintechs who claim to say that we want to be more regulated than less. Because we believe that the true innovation will happen where we control the money in motion for as long as possible. And I can only do so if I'm regulated. So once I'm regulated and I superimpose technology with it, then there is something that we can truly do. And to that end, we are regulated in some small way or form in India, but we are looking to get more and more regulated in India. We have applied for a license in the UK and in a few other corridors. By building this network of being regulated across the majority corridors that we operate in, and then kind of modularizing the technology that we've built, because at the end of the day, if you think about it, right, KYC is going to be a common thread across any jurisdiction that you operate in. Checking the bank account details, making sure the integrations are there. A lot of these modules are going to be kind of common. So superimposing this with the regulatory framework is going to give us the edge that we're looking for.
And also, I think the duration of the transfer, right?
Sure.
We were involved last year in doing some transactions, and it was practically every single day we're checking, has it reached, not reached, and we don't have any sort of verification.
Control or where the money is, right?
Yeah. And it took 8 days, if I'm not wrong.
Right.
So, and is it faster on Moneyhop?
Absolutely.
Significantly faster. I mean, typically we are able to credit what we call the beneficiary's bank account in under 24 hours. So let's say a student makes a payment today, and obviously assuming that the currency markets are open, we are able to undertake the transaction same day and funds credited sort of, in under 24 hours. In most cases, it's more like 12 hours, so closer to midnight, the student can expect the university's account to have received his funds.
In the max of 24 hours.
Yeah, but maximum 24 hours is what...
Unless, of course, to be very frank, since it's a cross-border transaction, there is instances where there's what we call EDD, or enhanced due diligence, in which even the bank that you're sending the money to will need to undertake. So if it does get caught in that net, which we feel is a very fair process, because if the money is coming into a certain country, they need to verify where is it coming from and for what purpose. So there are instances, there are random checks which happen once in a while vis-a-vis a certain profile of an individual, where it can take a bit longer, but 99% of the cases, the timelines are what Rahul is claiming.
Yeah, but 24 hours is where we are today, but we don't want to stop there, right? Like 24 hours is good, but we think we can get it down to a few hours, right? Like today, for example, Mayank or I want to get in some pounds from UK into India, it gets credited in under an hour or under 2 hours. And we think we can do the same thing when it comes to like outbound remittances from India as well. So that's the play that we are looking at.
So which is more complex, to get the money or to send from India?
That's like poking the eye of the bear.
It's pretty. I think I will stop. Let them answer.
We are a capital control country. I think that answers a lot of questions. We are not a free float country, so every dollar that leaves India has to be checked and goes through a certain regulated entity. And we are not a fully fungible currency, which means that I can buy dollars or pounds or euros in the middle of the night, and the delivery will happen. But we as INR, we can't necessarily buy or sell INR in the open market. So certainly it's much more easier to bring in money into India than for it to leave India.
Yeah.
And
Yeah. So
even for sending money outside India, while you are a fintech, you are kind of using technology, you are kind of doing regulation, you still have to use the banking channel.
That's
right. So it's not, but banks also use the banking channel.
Yeah.
And so help our audience understand the difference between what is it that the banks themselves are not being able to do
that
fintechs are able to do. If you can throw a little more light on that.
No, sure. See, what is important to understand here is the fact that there was a Santander CEO which said that in open forum that we are like elephants and fintechs are like greyhounds. So while we take one step ahead, they can run around us like 4 times. And I think that's what is important to understand. It's not that the banks can't do what we are doing, but it's a typical innovator's dilemma problem. It's about initially the market is too small or the revenues are too meager for them to focus on. And then a fintech like ours comes along, starts innovating, starts making some money, starts making some process improvement. You see a little bit more traction from the end audience, and then the banks end up realizing that it can be a substantial business, right? And we've all seen that, right? We've worked for larger organizations, and we felt that why do we need to have these smaller fintechs? Let's kind of create a cool room and give these chaps hoodies and put some bean bags around, and they can code the shit out of it, and we'll kind of make really cool products. But at the end of the day, the guys who are making the decisions are still walking around the floor in suits and suspenders, right? So that red taping is still there. We can take a decision in like an hour. The bank's going to take about a month, and all the approvals that it's needed. So and rightfully so at times, right? Because bear in mind that a large public sector bank or even a private sector bank has to deal with a lot more regulations because they are protecting the end consumer's money. So they can't be very innovative at times, right? So, and this is a topic which is worth discussing in itself, which is how does innovation happen, especially in the fintech sector, right? Because a lot of fintechs would flirt with the
boundaries of regulation.
The boundaries of regulation, right?
Yeah.
And if you're strictly by the book, and the regulations are also written for you to interpret it, right? And if you strictly interpret it, then it's a rules-based system and you can't innovate. And if you're opposite side of the spectrum, obviously you're not doing any good there as well. So you're somewhere in the middle and you're trying to flirt within and try to create some gray area where you can build an innovative system. The banks can't necessarily do that. Banks are still happy to have the flow that we generate and make some money on the back of that, while making sure that the regulations are abided by. But hopefully they'll come around and we'll move on to doing something more innovative then.
Yeah.
So a customer, so if I'm an ICICI or a Yes Bank customer, it can still take 3 to 4 days for my money to reach a UK bank account or a US bank account. But if I were to come to your platform or similar to, I'm sure you're not the only one doing this. Are there more companies?
There are a few other companies
in India that are.
Yeah.
Okay. So if we go to one such platform, then it's going to be far more easy.
That's correct.
And we don't have to kind of necessarily go to the branch.
Yeah.
No branch visits, no paperwork. You're able to see exactly how much you're going to pay in terms of fees, in terms of margin. You know that the funds will be credited into the beneficiary's account in X amount of time.
And to your point, we feel that when you send a courier, right, from India abroad or within India, you're able to see at any given point in time where the courier is, right? It's been picked up by the Bangalore depot and it's reached the Delhi depot. You don't necessarily need to know that, but by you looking at that, it gives you confidence that the parcel is in motion, right? So we've tried to, though we can't go to that level just yet, but we've tried to break down the money in motion and where it is at.
And it shows up.
It shows up on the platform.
That's part of your trust building activity.
That's correct. That's correct.
Yeah. I just want to go back to the point that you made on innovation, right? So you casually said that you spoke to 200 to 300 people before you built a business model around it. Just walk me through, what did you do there? Like, how did you find these many people?
Right.
It's a large number of people for sure.
Yeah.
And that's something that we try to simulate in all our innovation programs, that before you zero in on a problem, you need to really understand who's going through it and what are they going through exactly, and have a first-hand experience.
Yeah.
And 200 is a large number.
Yeah.
So just slow that down for us and walk us through that.
I had traveled abroad. By then I was in the UK. So and through that network, I had a bunch of people who used to travel back and forth between the UK and India. And then I had the student community as well. So I literally created a WhatsApp message, and I sent it to almost everybody on my WhatsApp list to say, if you know anybody who regularly travels abroad, would they be happy to talk to me for half an hour? And trust you me, I didn't do the usual questionnaire because I felt that's mundane and you don't really get the gist of what people are trying to say. So I literally spoke to these folks myself.
So was it a virtual call?
It was a virtual call initially. Then when I had traveled to India, I met them physically.
And what would you do? How would you?
I prepared a bunch of questions that I would ask them. I would try to understand their profile, how frequently did they travel, how much money did they spend, what were the channels through which they were spending, were they aware of how much were they paying, did they look through and understand what are the possible economical channels for them to spend. So I would do the entire thing, and then eventually I would ask them if there was a product of this and this nature, would this be attractive enough for you? And that's where and some people this is exactly what I would need, and that's really gave me a lot of confidence to.
And this is before you even built the product.
That's even before I left my job.
Yeah. Or you named the company or nothing, right?
Nothing.
But this was, let's say, a vague thought you had that
it was a hypothesis.
Yeah.
But pretty well validated, right? Because again, if you look at our times in the UK and Shubhanga, you would know this as well, right? You travel to Europe quite often, to the mainland, and Revolut or Wise, the only option you had was to convert your pounds into euros and hope that the euros you've converted would last for the holiday.
Yeah.
Or you would take a prepaid instrument, a prepaid card from a Thomas Cook or one of these companies.
Yeah. Again, it's a lot of effort, time,
correct,
energy, and also the fees is higher.
Correct.
Yeah.
And for how many of the student community? So the other thing that I'm just wondering is, when you're spending 10,000 or you spend 50 lakhs, you said, for your kind of movement.
Yeah.
In such a scenario, how many of your customers do actually feel the pinch of 4 to 5%?
Yeah. So see, there's a large number of earlier, to be honest, most of the folks who were traveling abroad, I felt, and I could be wrong here, were either kids of relatively high, well-to-do backgrounds, or a lot of Bangalore chaps whose parents had the exposure of the IT industry, and they knew that they wanted to sell the kids abroad. I mean, we come from Pesset, and half of the class knew that they had to travel, right? They were going to travel, and they had written their GREs and GMATs. But what we're seeing now is that a lot such communities coming, or lots of populations coming from tier 2, tier 3 towns, whereby the aspirational value of your kid studying abroad is extremely high. And we kind of joke around the office nowadays. Earlier it used to be roti kapda makan, now it's roti kapda makan and foreign education, right? So the aspirational value is rising. People are saving from much early on. There's a lot more avenues for you to get a loan in an uncollateralized manner. All of this has facilitated even a lower middle class guy to be able to travel abroad for studies. So I won't have an exact number, but I say there's a high population of India is by the very construct. India is a price sensitive market, and when you're coming from a little bit more humbler background, you're trying to save as much money as you can. So there's a high population, to answer your question, which is sensitive to this.
And I also feel that if we go back, let's say 20 years, people going abroad was much less
Limited, yeah.
So, and to your point that it's a smaller target audience that you're looking at. And also the assumption by the banks could be that they're coming from an affluent family or affluent background. Yeah. So it doesn't matter. So if somebody is doing an export business 25 years back, would be considered, oh my God, they're big. So this 4-5% or the kind of effort that the bank needs to put in, number one, the numbers are really small. And also, maybe there's a feeling that these guys can afford it.
Yeah, it doesn't matter to them. Yeah. In fact,
I think that's what's changed now.
Oh, absolutely.
The numbers are much larger and every penny matters.
Yeah. In fact, what we see is most of the students that we serve are going abroad after having taken a loan from one of these NBFCs or even a bank, right, to fund their foreign education. So, to be able to save $10,000, let's say average per year, but obviously a term, the term of the degree could be 2 years or it could be 4 if it's a bachelor's, or 3. You're looking at substantial savings over that time frame. So we got a lot of repeat customers as well, because they've seen that saving, they've started building trust with us, and they are able to use our platform to do their second and third and fourth remittances.
So one of the conundrums that most entrepreneurs tell me that I meet is on focus, right? Now, from any business standpoint, there are 3 vectors, right? So you have product, you need to kind of identify your channels, and then you need to identify who your customer base is. Now, within the cross-border itself, we spoke about travel and student population kind of being one of the significant part of the outward remittance pool, which you were focusing on. So in a sense, the outward remittance is a product space is kind of taken, you've put a boundary there. On the channel side, you want to kind of make it online, digital, you don't have branches, so you kind of nailed there. But how do you kind of decide when to go to beyond these customer bases that you've already started with, or beyond the products that you've already started with?
Yeah.
Tell me about your frameworks.
Yeah. So, to be honest, Shubhanga, it didn't come easy to us as well. When I initially started, I remember I landed in Bangalore on the 5th of March 2020. And I still didn't have a flat that I was renting, and my wife was still in the UK. And I thought I'll stay with my in-laws for a month and then look for an apartment. And I ended up staying there for much longer than I wanted to.
COVID also played.
COVID, exactly.
Yeah.
So at that point in time, the cross-border literally came to a standstill, right? I think it was the worst time in the last century, perhaps, to start a cross-border business. And I've left this affluent job working with Jeffries and kind of moved without family back to India. So we were initially, point I'm trying to get to is that initially we also scrambled a lot. We wanted to kind of look into a neobanking setup. We said, okay, cross-border is not going to happen. Let's do domestic neobank. Then we said maybe we can do mutual funds because, I have an expertise in a little bit of expertise in stock investments and so on and so forth. So we also scrambled a lot, and everybody who had a little bit of experience in this would say, no, just stick to what you want to do. But, at that point in time, you feel a little bit like a maverick and you want to do everything. But eventually we realized that for us to do well in a certain segment, we needed to be focused, and we stuck to education. Now that we're trying to get a little bit more comfortable with education and we have the right partnerships and so on and so forth, we of course want to expand the space. And the way we think about it is, we are essentially constructing networks. We are essentially constructing rails, as they call it in payments, right? We're constructing a rail, let's say, from Bangalore to Mysore. Now, whether you put a passenger car on it or a mal gadi, doesn't matter. So once we are comfortable having the right regulatory framework and the technology to be able to support money movement cross-border, we will certainly look into a bit more travel, and then of course go into the OPGSP, which is kind of facilitating less than $10,000 import-export for Indian MSMEs. So certainly that's on the framework for us. But you get the sense. I mean, you know when you're trying to do too much and you're not able to get anywhere, and when you have the right people and the framework in place and kind of business is upticking, then the senior management or strategy team can focus on expanding to a few other corridors.
I think my just a question would largely be around is there any fear that what if a bank does this faster than us?
Right. No,
because they have the know-how of the regulatory aspects of it much before you, and maybe it's just buying, or there's a newer technology that comes out that they can ramp up faster to her.
Yeah, I mean, the answer is always going to be yes, right? A bank would, of course, do this. A Google or the domestic payment businesses like a Razorpay or JustPay, any of these could obviously want to get into cross-border, right? It's just natural. I think one good thing, apart from the point on staying focused, is we like to also only focus on the things we can control and not really focus on things we cannot control, right? So अगर Amazon या Google आता है तो हमें क्या करना है, वो करेंगे, हमें अपना काम करना है. But that obviously is a thing that that we worry about or we strategize around. But I think the experience or expertise that we have built up over the last 3 years and a bit, that obviously is pretty solid compared to a newcomer or a bank trying to do this from day one. But I think there are other opportunities we are exploring as well, right? So obviously going what we call horizontal in India and targeting other customer segments is something that we can do. But equally, we can take the education business model to other geographies outside of India, right? So Indian students going to US, UK, you similarly have students in Southeast Asia, countries like Bangladesh and Thailand and Malaysia and so on. The same aspirational value, wanting to go abroad. Parents want to spend money for their kids to be foreign university educated, etc. So those things still hold true. We'd like to take that decision when we get there. I think we're still scratching the surface when it comes to cross-border for education remittances.
So what are the other opportunities that clearly exist given you're on the ground, but you're not focusing on, that might be attractive for other budding entrepreneurs in the
It's exactly what we don't want to say on the podcast.
It's exactly what you want. See, at the end of the day, I think, and I ran Fintech Accelerator for Yes Bank, right? So one of the key tenets that we at Yes Bank used to believe was innovation cannot be a single organization.
Sure.
In a sense, one organization cannot solve the industry problems.
Yeah.
And clearly, I think there are the industry is large enough. So if you have to kind of pinpoint what are those unaddressed, not looked at challenges, it may or may not be of interest to you as individuals. But if you want to kind of talk about that to the larger ecosystem, hey, come together, let's, you guys can potentially kind of help them out in understanding as well. What are those one or two areas that you would want to kind of...
Absolutely. I think one of the things that, a few interesting things that are happening in the cross-border space is, one is the UPI. I think that's going to be a game changer. I think beautiful technology, and what India has managed to do is, it's just mind-boggling, right? We are very well connected to the UPI ecosystem, and UPI is trying to go international. NPCI International is trying to connect the real-time payment systems of India to various Western economies. I think there's a large play there. And there's several phone pay kind of companies there are going to be built around that in the cross-border space. So that's one big thing that's going to happen. The other is the IFSC Gift City. I think India is obviously trying to build a DIFC kind of a model, if I can use the analogy, whereby for the first time an Indian citizen can hold foreign currency in bank accounts in their own names in the IFSC Gift City. So I think any play in these two areas is going to be big. Thankfully, we are, of course, looking at these two areas very closely because these are going to be like large disruptors to the cross-border space. Because once I spoke about the central clearing house, right? Think about all the intermediaries going out of water, and India's UPI connecting to Pay Now of Singapore directly, right? With the checks and balances in place, there'll still be people who'll make money on both sides, but essentially it'll be a real-time settlement both ways. I think that's going to be a game changer.
Anything you want to add, Rahul?
No, I think these are two big opportunities. I think the third one, more from a technology or infrastructure point of view, is, in India, when we do remittances, both outbound and inbound, we still rely on what's called the SWIFT network. But there are opportunities, again, RBI through the CBDC program is looking at other, blockchain-based or distributed ledger technology. So that's another potential play in terms of driving further efficiencies and technological excellence in terms of how the remittance happens. But in terms of business model opportunities, I think the points that Mayank called out, UPI going global, Gift City and Ahmedabad, these are really big opportunities.
And to add to what Rahul was saying, one other problem that we haven't spoken about in this cross-border space is liquidity is the biggest problem in the cross-border, right? Whereby the money literally needs to move from India to UK or US or Canada for that individual to have that credit in his account and for him to start using it, which means this is less of a technology problem, more of a liquidity problem. Now, with the introduction of the blockchain technology and DLT, so just to take a step back, Bank of New York Mellon implemented blockchain technology whereby the trades could settle not T+2, T+3, but T+1, which means that the liquidity was available 2 days earlier, and they were unable to unlock trillions of dollars by doing so. So similarly, if essentially SWIFT is just a messaging network, right? Yeah. It's saying that boss Shubhanga send me $1,000, debit his account by this much and credit my account by so much, right? So if we are able to kind of provide liquidity on both sides of the aisle, or anybody is able to, whereby the money movement doesn't necessarily need to happen. I've done the checks and balances here. I have taken your rupees and I have dollars available there, and I'm able to credit there directly, right? That will solve a lot of problems. And I think DLT and blockchain has got a big role to play there.
So that can be the topic of our next podcast.
Of course, yeah.
But otherwise, I think we've kind of delved fairly deep into cross-border as a space. Thank you so much for unraveling
it's a pleasure. It's a relatively new area, right? Very few fintechs looking at this space, and I think there's more and more interest across the ecosystem. So, happy to help out and just sort of help folks understand what is it that we are building and the opportunities that can come about.
And wish you all the best.
Thank you. Appreciate it. And it was a pleasure being here.
Thank you so much for your
time. Thanks, Shubhanga.
Thank you once again.